Good morning, everyone, and thanks for joining me on this Tuesday morning, bright and early. There's going to be two sessions of these webinars today. So I have a morning session, this is the first one, and then an evening one later on. Okay, I think we can get started. Just a reminder to keep your mics on mute, just to not disrupt the webinar and make it a seamless experience for everyone. But let's jump right in. So first of all, let's get the formalities out of the way. The information contained in this presentation is general in nature. It should not be taken as personal financial advice or as an inducement to set up an SMSF. So our agenda for today. From SMSF myths to a product explainer on Stake Super, you'll leave the SMSF Explained webinar feeling more knowledgeable on self-managed super funds. And there'll be a Q&A session at the end. So any questions you have, you can pop in the chat box and I'll go through as many as I possibly can towards the end. Or feel free to switch your mic back on if you want to ask some burning questions during that period at the end of the webinar. All right, we'll start off with an introduction of myself. So my name is Ciara Conway, and I'm an SMSF product specialist here at Stake Super. So I've been working in the SMSF industry since 2013, and I've worked across SMSF admin. So I started as an SMSF accountant. I did a little bit of SMSF auditing, and I've also worked in client service as well and managing teams. I joined Stake earlier this year, so around February, so I am still quite new. And I was really drawn to Stake because I felt like what they were trying to do with the industry was really exciting and it was fresh and new. So that's really why I joined. My background's in accountancy and finance. I studied in Edinburgh in Scotland, and I hold a Master of Arts in accountancy and finance. So that really set the backdrop for my career in self-managed super funds. And most of all, I'm really passionate about providing high quality accounts and a reliable SMSF experience for all of our Stake Super customers. So let's start off by explaining what is an SMSF. So some of you might already be familiar with self-managed super funds. Maybe some of you have never really heard of it before. So we'll just strip it back down to the bare bones and start from the beginning. So a self-managed super fund is essentially a private super fund that you own and control. And its sole purpose is to provide income for retirement. So in a self-managed super fund, the max number of people that you can have in it is 6 members. So this was quite recently increased from 4 members. So it's very common for couples, so spouses, to be members of a super fund. But then there's also some funds that will have like family members, even add their children in there as well. Self-managed super funds must have one type of trustee. Now there's 2 options available. There's individual trustee or corporate trustee structure. With individual trustee, if you're a sole member of an SMSF, you must still have 2 individual trustees. So that's something to think about if you are interested in individual trustee structure and you want to set up the self-managed super fund just for yourself, for your own super, you need to nominate a second individual trustee. And the second option is a corporate trustee. Now, this is what Stake Super offers a default at no extra expense. And what this means is that there's a special purpose company set up that acts as the corporate trustee, and the members then are appointed as directors of that company. Now, with a corporate trustee, there's no issue if you're a sole member, you can be a sole director of the corporate trustee, so you don't need to get anyone else involved if you want to go down that route. It's important to remember that a self-managed super fund are very separate accounts and investments to your personal holdings. They should always be separate. So, for instance, if you're using Stake for your self-managed super fund, but you already have a personal account, it's really important they don't get mixed up and that you transfer money out of your super into your personal account. That would be a breach. So it's really important that all of your super accounts and investments are held separately. With a self-managed super fund, there are some annual requirements, such as the annual end of financial year financial statements and accounts. An annual return is required to be lodged, and also an independent audit is required annually as well. And so that's where Stake Super comes in, that I'll go through during the presentation, that we handle all of those aspects. And lastly, self-managed super funds give members complete freedom and control over their choice of investments. So it's not necessarily like other large super funds where the investment choice is made on your behalf often. So it really gives you complete freedom and control to select the investments that suit the members. All right, so let's take a look at how an SMSF works. And we'll compare it slightly to an APRA regulated fund. Now, when I talk about APRA regulated funds, I'm talking about the large superannuation funds that majority of people in Australia are members of. When you start your first employment, you often automatically get signed up to one of these large super funds. So with a self-managed super fund, as I alluded to in the previous slide, it's really managed by the members themselves. So that is, I guess, the arrangement of all the end of year requirements, like the accounts and audit, and also the investment choices as well. Of course, you can hire a financial advisor if that's, if that appeals to you, but essentially the management of it is run by yourself. Whereas with an APRA fund, there are licensed trustees managing or overseeing the super fund. So it's a pooled super fund managed by these trustees that would have many, many members. Again, with SMSFs, members have full investment control. So you get to select really what suits you. You get to diversify it as you wish. One of the advantages of SMSFs is that you can select investment or asset choices that you can't with an APRA fund. So for instance, direct investment in property, or crypto, or even precious metals like gold or silver bullion. And so you really have complete control over that investment choice. Whereas with an APRA fund, members are generally less involved in investment decision making. So often it's just defaulted and you play no part in the decision making, or there are some large super funds where you can select what category or portion of your portfolio can be invested in a certain asset class. So SMSFs are regulated by the ATO and ASIC, whereas an APRA fund is regulated by APRA, which is given away in the name. So when it comes to contributions or making contributions to the fund, it's very, very similar. So employee contributions are made to the fund via a clearinghouse called SuperStream, and it's the same with an APRA fund. So if you do set up an SMSF, along the journey, we'll provide you with the details that you would need to provide to your employer to get them to make the contributions directed to the self-managed super fund rather than an external super fund. So it's very simple and very straightforward. It's the exact same manner. Voluntary contributions are also accepted by SMSFs as they are with large APRA super funds. So that could be personal concessional or personal non-concessional contributions. And also any of the government co-contributions or low income contributions are also accepted by SMSFs as they are with super funds, or the first home buyer schemes. Any of those are accepted by SMSFs as well. Okay, so let's start debunking some of the most common self-managed super fund myths. So the first one there, and this is probably the most common or the most I hear about anyway, is that I need at least 200,000 in super to start an SMSF. So the simple and short answer to this is that it really depends. But it is important to note that the ATO don't mandate a statutory minimum requirement. The fees that the management fees that are applicable with an SMSF play a major part in the requirement of super that you need for an SMSF. And it's really important, you know, if you look at your APRA fund fees, sometimes it can be really comparable, or sometimes it can actually be more cost effective with an SMSF. So for instance, according to a recent CanStar report, an average APRA fund annual fees come in at approximately 0.89% to 1.17% of the total super balance. We know that the cost of managing SMSFs has come down over the last decade. And some APRA funds, the fees related to APRA funds is often higher than expected. Again, from an earlier CanStar database from January, the fees for an 80K balance in the super fund with defaulted investment options came in at up to 1,273 per year, with an average of 773 average fees. Another point to make when it comes to the minimum balance is that the fees that are charged for an SMSF, including the stake super fees, they're applied to the total combined super balance across the members of the fund. So you'll pay the same amount of just the management fees or ATO levy, whether it's one member in the fund or if you had 6 members in the fund. So it can be more cost effective the more members that are in the fund, essentially. So our second myth of the day is SMSFs are for the older generations. So for many of us, when we think about SMSFs, you know, we think of people approaching retirement or people who are enjoying retirement. And often people think that it has to be for the wealthy as well. But the SMSF industry has definitely changed, and its self-managed super funds are more accessible than ever. And to prove this, according to a recent class annual benchmark report, 30% of new SMSF establishments in the 22 financial year were between 35 to 44-year-olds. So that's a huge portion of all of those establishments in that age group. So we know that the demographics are definitely shifting. We also know in our research that the key main driver, and this always comes up, is that members, the motivation for setting up an SMSF is to have more control over their super. Again, this is backed by a 2021 investment trend superannuation industry analysis report that show 73% of the members involved in that analysis confirmed this. And this drive to be self-directed is really true of all ages. So it's not necessarily just those approaching retirement, but those in the younger age groups as well. Self-managed super funds have been slow to evolve, but now it can be really a seamless and fully digital experience, as I'll go through when I talk about the stake super product. Our third myth, annual accounting and audit fees are $5,000 a year. So the key argument to this is that there's been a huge advancement in SMSF accounting technology over the last decade, and especially since during my time working in the industry. And this helps significantly reduce the man hours required that are involved in the accounting and audit side of the self-managed super funds. And so we know that when we can reduce those man hours, that can really bring down the costs that accountants and administrators charge customers for having a super fund. Again, the Rice Warner cost of operating 2020 report confirmed this by saying that the fees have fallen consistently over the last 7 years. Another argument against this, to show that it doesn't have to cost $5,000, is that with Stake Super, for instance, bundling all of the administrative and investment platform into one product really creates efficiencies and improvements there that significantly reduce those costs as well. So Stake's annual fee of $9.90, which covers the full administration service of an SMSF, including audit, is well below the average annual management cost of approximately $5,000. Now that came from a 2020 ATO statistical overview. That was where that $5,000 figures came from. I have to be a stock market savant or property mogul to have an SMSF. So let's take a look at this one. Well, you certainly don't need to be the Wolf of Wall Street to set up an SMSF. However, it is good or important to have a knowledge of the financial markets or an interest. So we know the self-managed super funds provide the freedom to diversify as the members wish, giving you the opportunity to invest your retirement savings in the asset classes of your choice. And then looking at the properties, we know that properties are quite popular in self-managed super funds because you can't necessarily invest in them with large super funds. And there are some people out there who will set up a self-managed super fund solely to invest in a property. However, it's not all. In fact, only 30% of SMSFs hold direct property. Again, that was taken from the class annual SMSF benchmark report that was published earlier this year. Okay, now let's take a look at our Stake Super product. So in the past, self-managed super funds have been expensive and complicated. And so what Stake Super aims to achieve is by taking all of the hassle and paperwork out of an SMSF and letting customers focus on the investing side of things. So our mission is to enable every Australian to see their superannuation as a real and accessible part of their financial wealth. And we do this by being your one-stop self-managed super fund shop, which covers the full administration service that I mentioned before, but also the seamless access to the investing platform. So it's all in one unit. Now let's take a look at Stake Super in a nutshell. As I mentioned, everything's all under one familiar platform that you're probably familiar with already if you have an investment, a personal account with us. There's a wide range of investments. So as I mentioned as well, you can invest your super in assets industry funds simply can't offer, like the property or precious metals. And you really have full control over how you diversify your portfolio. Our customers can focus on investing while we handle the rest. So making sure that the fund's compliant, making sure that the fund is lodged in time, that we conduct or facilitate the annual independent audit. Yeah, we're here to look after it all. And the cost effectiveness of running an SMSF, again, through our technology and our in-house specialized accountants, we can really offer a cost-effective product and manage your super fund. So let's take a look at the wide range of investments that an SMSF or Stake Super can offer. So Stake Super gives you the freedom to expose your superannuation to assets industry funds can offer with full control over how you wish to diversify those assets. So on the Stake platform, you have access to the US stocks and ETFs, AS stocks and ETFs, and also we will be introducing Stake Crypto in about 6 or so months' time. But that's not all, it doesn't stop there. You also have access to residential and commercial property, cryptocurrencies with other providers off Stake platform, precious metals, private companies, such as startups, unlisted companies, managed funds, share options, collectibles like cars, etc. The list goes on. So what's exactly is included in the Stake Super annual fee? So we have in-house SMSF accountants and specialists that will look after the preparation of the end of financial year financial statements, including the member annual statements. We prepare and lodge the SMSF annual return. So we act as the tax agent of your SMSF. So there's no need to, hire an external accountant when it comes to your self-managed super fund. We also facilitate the independent annual SMSF audit. So we have audit panels that we work with, making sure that the audit is conducted as quickly and as seamless as possible. We provide annual member statements. So this will break down, I guess, the split between members of the fund in terms of that value at 30 June each year. And it'll also provide a detailed breakdown of what contributions were provided to the fund, the preservation amounts, etc. Annual investment performance reports. You can look at the end of financial year, the movement of your investments throughout the year, the income, etc. We also look after the lodgement of quarterly activity statements, if that's applicable to your fund. And we act as the ASIC agent of the SMSF. So we prepare the annual trustee resolutions and minutes for you to sign. So at Stake Super, we have two packages on offer. So by far our most popular package is our standard package of $9.90 per year. Now this includes the full admin and audit service, as I mentioned. And this is applicable when the assets in your super fund are all on stake. So that could be the US or AS stocks and ETFs, the over-the-counter stocks, or when we introduce crypto. So essentially, if everything's on stake, the fee to look after the fund is $9.90 per year. Now, we know that some of our members or investors may be interested, or perhaps down the line, be interested in investing in other assets off the stake platform. And so for those ones, because there is an extra accounting and audit work involved, we have a Stake Super Plus package that costs $2,640 per year. Again, full admin service and audit with a direct client service manager. And from there, your options are endless to what investments you have within your super fund. We look after all the regulatory aspects. And if you do need to reach out to us to ask us any questions on those investments, we're most definitely here to help provide factual information. Okay, so how do we establish your self-managed super fund if you sign up with us? So the first part of the process is fulfilling the application page and submitting it to us. It's a really short application and takes approximately 5 minutes. So once we receive your application, the first thing we do is we register the special purpose company that I mentioned acts as the corporate trustee of your SMSF. Once that company is registered with ASIC, we prepare an establishment package, which includes the trust deed, the member application pages, ATO trustee declarations, minutes and resolutions, all in one package that will be sent out to the members to digital sign. Once those signed documents get sent back to us, we can then apply for the self-managed super fund's ABN. Now, the self-managed super fund has its own ABN. So for instance, if you have a company that you already have an ABN for, or a personal one, that won't apply. We'll apply for a new one that the SMSF needs. We then apply for the self-managed super fund tax file number. Again, it's its own entity, so it needs its own tax file number. And at this point, we wait for the ATO to approve the self-managed super fund as a registered and compliant super fund. Once that's done, we then go ahead and set up or open up your Stake Super account. And from that point, we will send you out the details that you can provide to your employer to get your contributions directed directly to the self-managed super fund. And we also provide a link that you can fill out a form if you wish to roll over some super from a different super fund, and we can help facilitate that process or that rollover from the super fund. Once the rollover hits the SMSF account or the Stake Super wallet, it's ready for you to take investing control of your superannuation and start investing as you wish. Okay, so that ends the content in today's webinar. But as I mentioned, I've got plenty of time for some questions and answers. So if you'd like to pop some questions that you had throughout the webinar, feel free to pop it in the chat box. And I shall go through and answer as best I can. And while I'm waiting, I'll give you a few minutes to pop some questions in there. But while I'm waiting, I did want to just mention with the fee. So on application, we do require an upfront fee. And that is because we have immediate cost to set up the company that acts as a corporate trustee and with the legal documents that we send out. However, it is a self-managed super fund expense. So the invoice essentially is in the name of the super fund. So once your super fund, you've got your super rolled into the fund, you can actually reimburse yourself for that fee. So it's a temporary personal expense. So I just wanted to clarify that and be clear on that one. So Senthil had one question, can we have an SMSF without having a trust? So yes, you can. However, we don't have this option in the application form. However, if it's important to you, I can definitely most definitely facilitate that. I'll provide our direct email to the super team, which is smsf@hellostake.com. So if you are interested, but know that you want individual trustee structure, I can definitely help with that. And I'll just pop our email into the chat box. So hopefully you've got that. And if you have any questions after this, feel free to email us directly. Okay, so Joshua had another question. Is the 990 per year fee likely to increase in the future? It's interesting. I've had this question in some of the other webinars I've done. So I can't guarantee for sure with inflation that in 10 years' time, it's still going to be 990. However, I can be very transparent and honestly say that we have no intention of increasing that fee. So, you know, we're not trying to get people in the door with a low cost fee and then, you know, jump it up in a year's or 2 years' time. That's not absolutely what we're not about. So we don't have any intention. However, I can't guarantee it. The industry will change. Audit fees, for instance, might increase. There's some aspects that we don't have control over that would affect the whole industry. So Arif, how does the property investment work? That is, if I see a property I would like to buy, how would I release the funds from my stake SMSF to pay towards the deposit, etc.? Okay, so with the investment property, you can have the option. So essentially for majority of our stake super self-managed super funds, the stake wallet is essentially the main cash account for the self-managed super fund. So you can just pay out, for instance, I know that with the settlement of a property, you'll have to pay a deposit. So you can just withdraw the deposit from that stake wallet. As a Plus member, you also have the option to have an external bank account. So again, you can pay the deposit out of there, and then on settlement, whatever balance is required would essentially come out of the self-managed super fund again. So it's just important to reiterate that any of the investment money that's needed for that property, if it's held by the super fund, must be paid out of the self-managed super fund itself. Can we move UK pensions to stake SMSF? So you can. It's not a straightforward process to move a UK pension. You do have to be a certain age to move a UK pension. We can definitely facilitate the tax side. However, we don't require the license required to organize the release from the UK pension side of things. There are some people in Australia who specialize in that sort of process. So we can definitely help once the money's received in the fund, reporting the tax elements, etc. But yeah, it's not a straightforward, I guess. It's an extra service that people specialize in. But Arif, if that's important to you when you do meet that age bracket, I believe it's, I think 56 or something like that. I can double check. But feel free to email us and I'm happy to go into more detail or even put you in touch with our accountant to talk about it more. Jonathan, is the $9.90 per year fee applied to each member of the super? No, it doesn't. So if you're thinking of setting up one for yourself and your wife, it's $9.90 in total. So that would be, $445 each. Definitely not $9.90 per member. Are there any requirements for diversifying in self-managed super funds? Can we invest all of the amount in property? So there aren't necessarily any specific requirements to diversifying. I mean, for instance, you can have 100% of your super, for instance, invested in property. However, if you're the ATO in recent years have extra requirements, and it's more from a risk perspective with SMSF trustees investing, putting all their eggs in one basket. So if you hold 90% of your super or more in one asset, you do have to provide what's called an addendum to your investment strategy to justify that risk that you're taking on. But in short answer, you can. You would just need to consider your risk profile as part of your investment strategy that you're required to update each year. And to add to that, our team would definitely help out with that investment addendum. We do provide a template investment strategy when you sign up. However, everyone's investment strategy would be different. So we do encourage you to update it specifically to meet your needs. Do you have any sample end of financial year reports that you provide? Great question, actually. You know what? We don't have it on hand, but that should be pretty straightforward to provide. So I'll just leave a note for myself. I'm happy to provide those for you to have a look. Jonathan, how much is the one-off initial setup fee? Another great question, and I should have been more specific about this, so that's my bad. So the great thing about Stake Super, and as far as I'm aware, I don't know of any of our competitors that do this, is that we don't charge anything extra for that initial setup. So we absorb the cost essentially for the corporate trustee setup. So it's just the annual fee of $9.90. So your first one would include the initial establishment of the fund plus your first year's tax return. And then every annual fee thereafter, would include the lodgement of a tax return. So there's no extra cost for that initial setup fee, just the annual fee of $9.90 each year. Santha, sorry, could you please place the last slide on the webinar? Oh, yes, of course. I'll bring up the slide to go through the process of establishing the webinar. Or sorry, establishing the self-managed super fund. So hopefully you can see that okay. In terms of timing of setting up a super fund, I do get this question a lot as well. So generally speaking, it could take between 1 to 2 weeks, and that's a good rule for a super fund. So that will be on average, and that's fully established. And then it may take, depending on where you're rolling over your super fund, it can take a week or two for the external super fund to process and release the rollover of your super to the SMSF. Now, there are some edge cases to that where it can take a bit longer for the ATO to register the self-managed super fund. They hold a right to process it within 28 days, but they would be edge cases. Do you have a sample deed on your website? Unfortunately, we don't have a sample deed. However, in case you want to do your research and make sure that it's a good quality deed, I will say that we use Now Infinity to provide the trust deeds that we use at Stake Super. So Now Infinity is actually owned by Class, that you might be aware of, but you can have a look into them. But yeah, we use their deed along with many other SMSF providers in Australia. Any other questions? So if I already have an SMSF, can I roll over the shares to a Stake SMSF without a CGT event? Absolutely. So if you already have a self-managed super fund, you can just transfer the admin services to us. So regardless of where you hold the investments or anything like that, the first year is a flat rate of $9.90, and that gives members an opportunity to transfer their assets onto the stake platform, which keeps them within that $9.90 package ongoing. But we can definitely take that on. And if it's within the same SMSF, there's no CGT applicable because all of the assets are held within the same entity. Now, let's say, for example, you had an SMSF, but you wanted to create a new one and you wanted to roll over those shares. That would be from one entity to another. So that would definitely trigger a CGT event. But if it's the same SMSF, that's straightforward. We could help with that portfolio transfer if it's just simply switching the admin service and you want to change from one broker to stake. That's no problem at all. We've got many of our customers doing that. So Senthil, when we switch from another super, are the shares transferred to stake, or will they be liquidated? So generally speaking, when you roll over from a large super fund, it comes over as cash, and that's majority how I see it. Now, I do believe there are some super funds where the members directly own the shares, and it may be possible, depending on how they're held in that fund, to roll them over into the fund. In that case, it's from one entity to a new entity, so the CGT would be applicable. Short answer to your question is the rollover comes in as on a cash basis. So they're liquidated as that date, or your shares in that portfolio with the super fund are liquidated. Any other questions? Great. Well, they were really good questions. I think we've really covered the majority of the issues, or the majority of the questions I normally get. As I mentioned, and I'll pop it in here just again, please feel free to email us at smsf@hellostake.com, and those emails come directly through to myself. If you wish to schedule a call back with myself directly, more than happy to do that. Just ask for a call back in the email and let us know when you're available. We can definitely arrange that as well. One quick last question was not related to super, but is there any plan to offer stake joint account? So I would love this for our SMSF customers, because I work solely on the SMSF, and we know that there's interest in that. It may be in the pipeline. However, there's just so many updates and so many improvements being made, to stake in general, that it's hard to fit everything in. So perhaps eventually, but I can't guarantee, for instance, it's going to be this side of Christmas or anything like that. But we know that there are definitely customers out there who want it. So unfortunately, I can't give you a straight yes or no answer. But I'm definitely hopeful in the future that will be introduced to have a joint account. Great. Well, thank you so much for joining me this morning, nice and early. It's been a pleasure and I've really enjoyed it. As I mentioned, feel free to reach out if you're interested. Thanks again, everyone. Have a good day.